Hey, what if you could spot bear market bottoms before the bounce? I've been burned many times trying to jump in too early, but the three clues I'm going to share with you today changed everything. They've nailed the bottom back in 2020, just before that 30% rally. Most traders miss these clues because they don't know about them. You won't. Hey, let's dive in right now. Most traders guess. They use lagging indicators, their gut call, and they get burned. They miss the bottom and you lose huge upside potential. You jump in too early, and guess what happens? Basically, you're grabbing falling knives. I chased the noise too until I cracked the code and a system that lights the runway, no more guesswork, and no more just following your gut feeling. Trading blind is a lot like trying to land an aircraft in the fog. You might find the runway, but then also you might crash. Most of the coaches out there skip through these important clues because they've never used them before. These three tools, Wall Street's quiet edge that they don't want you to know about. Stick with me and you'll see what works. So here's the system real fast. Hey, check out this chart of the VIX. This is the volatility index of the S&P, also known as the fear gauge. When it spikes over 35, as it's done here recently, it's screaming panic. Typically, people are scared to death. They're bailing out of their positions. They basically aren't aware that with this indicator, when it gets up here, a bottom or an opportunity to buy stocks is just around the corner because it doesn't stay high very long. So we want to wait for it to ease back down, sometimes getting back down below the 30 to 25 level, that the panic's fading. And that's your contrarian clue that it's time to jump into various stocks. I pair this with momentum, but let's just do a real quick summary of what it means and what the VIX shows us. VIX's fear grade, just really simple, is one, when it spikes above 35, pay attention and make it part of your regular daily or weekly routine to review, especially when the market is heading down. Secondly, VIX begins to fall, panic selling is exhausted, and smart money starts positioning themselves to jump into some trades. And VIX eases towards 25. That's the first confirmation signal. Fear subsides as the bottom basically either forms or is in place. So the VIX works as a contrarian indicator. When extreme fear starts fading, opportunity emerges. Okay, the big thing that you're waiting for, though, is I pair this with momentum. So stand by. I'm going to show you what that looks like right now. Okay, two of my great buddies from Texas turned me on to the TSI True Strength Index, gosh, about 10 years ago. And what I've done to it is I modified to make it fit my trading better, but also, secret, I'm going to tell it to you right now, is the lower reversal signals tend to reveal where at least some tradable rallies happen. And in the case when there's a bear market, it also can show us when and where a total reversal happens. And we can see every time it gets down into the lower level, below the negative 42 level, it does a bounce. And when it does that, it provides us an opportunity to rally. This is the S&P daily chart. The cool thing about this indicator, though, is you can also use it on actually, you can use all these indicators on the daily, weekly, and monthly charts. So what does it look like on a weekly? Same type of thing. Check this out. Just recently, huge week this week, but look at my momentum is starting to shift up. Again, that's clue number 2 that a reversal is right around the corner. Let's summarize that on the next slide. And oh, by the way, if you would like to get exactly what my setup is on my TSI, just drop a comment or shoot me an email, and I'll be glad to share with you what my setup is that you can then apply to your charting program. Okay, so my custom TSI is basically I'm watching for a TSI reversal down below the negative 42 level. I look for positive divergence. That makes the signal even more powerful. And I confirm the price action. I'm looking for basically a reversal candlestick to confirm this one. So that would be number clue in place. So then I can set my entry with my conditional orders and I'm ready to rock and roll. My TSI cuts through noise that trips up standard indicators like the RSI. But wait, there's one more indicator that I know you haven't heard about that is so uncanny at predicting market bottoms, it will blow your mind. The next indicator of these three secret indicators is the percentage of stocks above their 20-day moving averages on the NYSE. When this indicator drops below the 30 line, that means that 30% of the stocks on the NYSE are below their 20-day moving average. That's a sign of weakness. Don't tell anybody, but it has bad breath. And if it digs down even further, the further it falls, typically the better and stronger the rebound is. But you can find this. I will put the link to this particular page on bar chart, and it's the percentage of stocks above their 20-day moving average. And it doesn't spend much time, just like the VIX. It's almost like the opposite side of the VIX. As you can see, once it gets down below that 30, it doesn't stay down there very long and does a really nice bounce. When it gets down below the 20 level, typically that's pretty close to having capitulation. And then when it's rising back up, I'm looking for the reversal signal on the price action, and that locks in my system. So again, this chart is just amazing and uncanny on determining when the market is going to bounce. Hey, let's summarize that on the next chart. Okay, guys, check it out. Below the 10% line, capitulation. Rising past the 25 to 30, early recovery. And then above the 30, equal to a confirmed uptrend. Breadth measures rally quality, and accelerated breadth means sustainable move higher. Remember, when the VIX drops, the TSI curls up, and breadth climbs, that's the go time. Remember, this is a triple confirmation and a convergence of clues. When all signals align, that typically gives us a high probability that the bottom is identified and it is in place. These three secret clues cut FOMO and fake outs. The VIX is for fear, TSI for momentum, and then the breadth through the percentage of stocks above their 20-day moving average. When they align, then you've got an edge. Has this been an eye-opener for you? Which of these clues is new to you? And for more no BS tools to help trade your way to freedom, subscribe. I'm Dennis Wilborn. Remember, be patient and be prepared.